Good afternoon, all. This is Tari Hemsey. I'm sorry we're running a little bit late. It's 5:10 p.m. on Wednesday, 23rd of March, 2022. All of our webinars are recorded. None of them are edited. I think we have one edited once because it showed my password. We had to cut it off. So that was it. But everything is there. There's no 18-minute gap. They're all posted here on our videos channel, which is on YouTube. So, and you go in direct from the homepage. Okay. We're also posting some charts on our blog. You would know that we're doing slight changes. We do it for featuring what's called chart of the day. Once a day, I get a chance to put one chart up, give you some explanation, some things to read. Of course, today I was also interviewed by Wall Street Journal, just completely out of the blue. Unplanned, but as a fellow I know, he actually gets these emails, the NSA emails, and he says, Barry, I need help right now. I said, okay. Call in. What are you going to say to Wall Street Journal? No, I'm busy. Yeah. But I'm very privileged to have a great team. And Peter Cook, who runs our chat room for NQs, he was there. I was comfortable. So we're good. So we talked about chart of the day blog. You can get to that, by the way, from the blog here. It's our blog down there. Videos on video chat. On the videos, best thing is to subscribe. Once you subscribe, you don't even come here. It just gives you updates. Okay? To schedule to be in the webinars, or if you're not on the list, you want to join us, we made it again easier for you and for me. We added, without logging in, you just click on members, without being floating all that. You will see what's going on. For example, at the end of the day today, this goes to 30 next Wednesday. Okay? We changed that. And you register here once because it keeps track of you. If you want to be dropped off, you send us an email. We go to webinar and drop you off. Otherwise, these are recurring webinars. Okay? This way we don't have to send big emails and that. You know you're reminded, I think you're reminded 2 days, 1 day, and 1 hour. So that's there. Wednesday is always a webinar for market timing. We do not give you a trade. We'll tell you what our thinking is. Okay? The trades go through members page through a product. The two products called PMT and PMT Pro. Okay, that's that. On ORB, this is what most of the items I have here to disclose. We are introducing 4.4. We're going to be reviewing it tomorrow night. We have found out when we give you open house, folks come in with a lot of questions, and rightfully so, but that's the wrong area because the system is running, it's live. It's a market, you know. I got to pay attention to the trades. I got for the fund I run, and plus what our members are trading there in the chat room, and it becomes what do you call it? Collision intensive. So what we're doing this time on the system review, we're going to and we do this once a month. It just happened that 4.4 is finally ready. There were some data issues. I'm going to go over that also with you guys. We do have a package called Elite that allows you to remind yourself on your trade station. So Mac won't do. You need to be Windows 10 Pro or Windows 11 Pro. But all the system requirements will go over that. And then we're going to show you what things you cannot do with your data. There are issues out there you have to be aware of, internet-wise. Okay, there are things you cannot do. The machine gets confused. Okay, if you're running it live, if you're running it with us, then you enter it one trade at a time, any platform you want. Those with Mac are limited to the chat room. Can't get into Elite. But OS, if you have Windows, you can go to Elite. Well, so we put it this way. 1 hour for review tomorrow night. We go over that with you, so you know what do's and don'ts are. And then full day on Friday. Starts at 8:30 in the morning. Best days of the system are Mondays and Fridays, then Tuesdays and Thursdays. Not Wednesdays. We don't trade. We didn't trade today by the system. We trade manually. So it's the first time this Friday that we're giving you access on a Friday. And this is the most robust system we have. Okay? If you go back to the product, you can see what it did. It killed it. That's annual return on 3 contracts. This was posted last night. Just the data was made available, and we posted. You can see the payoff curve, so you can see the monthlies. You can see what it does. Very, 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 very cleverly done. It was 20 years of my life, and a very good programmer on the API side. It's an and, not the or. If I could have done it before, I would have. I had indicators. No. With his help, this got there. You could see the MFE and MAE. So if from a system standpoint, you'd see what it's done. It's a remarkable system. That's why a number of hedge funds, some of them is very, one of them is very large, is interested, and I'm going to be in New York for a different business, but I'm going to get in front of a few of them and go over it. That's why I'm a little bit nervous, and it's a lot of work, because I got to make sure there's no surprises. And there's a lot going on. So, my apologies for that. Let me go over one more item. Timer Digest. There'll be some questions on Twitter. What was your position? We went down there. Why didn't you change? Market timing is not day trading. Don't confuse the two sellers. Okay. When we're ranked by Timer Digest, that means that we're going to play with their game, their rules. Okay. They do not allow us to change position, bias, because their client base that this goes to are large institutions, semi-retired people who are looking for retirement money, long-term returns. They are not going to go in and out. The commissions are going to be too high, and the noise usually is not worth it. We got to do that legal positions in the market. We're maxed out at 1 to 2 bias changes per month. Okay. Now in our system, if we go on what we did, which you see here, no, I'm trying to see a mistake I'm trying to fix. I can't type. I went to school here. Can't spell. Sorry. If you look at this is like 6 years period and 160 trades. So by the way, this got to get updated. But what we have here is, I'm sorry, to give these results, on the average, 18 trading days. So about 3 weeks. So that's our average. That's what our clients are used to on the average. Now, sometimes we've been a little bit faster, sometimes a little bit slower, depending on like summer month versus, let's say, January, February, when we have some turbulence, or December. So just because, and I'm going to get to a chart here, we got to stop that on the last trade. I didn't change my bias. People say, why don't you get long? I said, no. I'll get short when I want to. Okay? Please don't tell me what to do. I'm the timer. Let me do my thing. I understand this market. And it happened today that this thing is beginning to show its hand. And we're going to analyze that in a second. But you can see. So I want to make sure, somebody was asking me what mistakes you did. Well, I did make a mistake. I should have gone at least flat. The mistake I did was that I traded what I think, not what I see. That's the old saying. Trade what you see, not what you think. Okay? Because sometimes we reinforce that in our head, that it's got to go there. Well, it won't. We won't be able to stay liquid. Market could do the other side. But when I had to stop, I got stopped out. So my bias went against me. But my position had a small loss. Why? Because there's put spreads and call spreads. Small blip when you lose. But if you win, huge. Okay. Our first trade on this attack issue went to 5x. Yeah, the dollar went to 5. Yeah, so, but those who were in the trade saw that. Boom. And some took advantage of it. I got to it late. Some didn't. I have a friend of mine who was on a plane that day. Yeah, so I told him, I warned him this morning. I said, you got to be ready for this morning. That was on 24th, anyhow, but he was going out of the country and completely missed the big return. He was positive, but not as good. Anyway, we'll get to that in a second. First of all, let's go over what we always do, economic calendar. Okay. What's ahead of us is that, this is 23rd. Okay. If you look at the data, we have CPI, PPI pointing around, actually a PPI, 12 to 15%. 12 to 15% year-over-year inflation. Some of it will be passed on to consumers, not all of it. Let's say 12% is not passed on, held back. Let's say they pass on 3%. and at 12%, you're 1% a month. The way I look at the data right now, I expect the PPI CPI to print 1% a month by next month. Why? I warned you about oil prices. Not just it, Admiral Tico, okay, my XO. Admiral Tico warned you that we're going to be going there. I mean, all you have to do is look at his feed, and you could see that this little one, 9.5 pounds, okay? This whole 9.5 pounds of it told us what's going on. So, I know, Tico, if you're following him, you should. He talked about, what was it? I forget what it was here. 12 to, it was also on Facebook. He was looking at 125 to 130 on the March delivery. I'm sorry, April delivery of crude oil. We printed 130.50 on Brentman to 139. Okay, so let me come over here and go to. Why is it doing this? Okay, hold on. 1 second, guys. It's the screen. Okay, there we go. If you go there, this printed back then. Let's go to daily. You see what it printed. Okay, now he was targeting 4 sigma. This kid is not dumb. He knows to look at vibrational force of the nature. Okay, we're in the market. We're buying and selling. It has impact on all of us. He looked for 125 to 130. We printed. I'm saying this is the wrong contract. So hold on. What is it? J22? Yeah. The contract back then was J22. Yes. See what I did. Hit 130.50. There we go. Almost hit 4 sigma. It's pulled back. Now it's not trading anymore because it's delivering time. We'll go to 22. That's where we are. We're at 114. Okay. Front month. So I expect us to take 128 out. Things are not going to get better. They're going to get a little bit worse before they get better. So with that, and then with the CPI, PPI, which this is a big component of, but Comrade Powell has no choice but to tighten. Okay? To tighten. Why? Because he gave so much free money out 2 years ago. Now, one argument is that he should have done that. Well, then we would have been at 10,000 on the Dow. I mean, you have choices. Okay? We really, really messed up. And he had to step in March 23rd, 2020, which was a Monday. As you know, 2 years ago, in our webinars, we had said about late February, early March, look for it. March equinox. Let me say, the spring equinox. March 20th, which was a Friday. That should be a turn plus or minus 1 day. He didn't even make it plus 1 day. It turned Sunday night, March 22nd, 2020. Look at YM. Our goal was 18,000. YM printed the lead contract, 18086. Okay, he went and hit that. That was the lead contract, the June contract. He went to our 18,000 on Sunday night, and the reversal came the following day because what Comrade Powell did. Now he's going to take some of that money back. A lot of hedge funds don't like it because they're used to these free money. And, of course, that financed Robinhood and the like. PPE and all that. By the time the government came into help, not the Fed, but the government came in, if it waited that long, we'd be much deeper trouble. The other problem we have right now is this supply shortage. That'll probably go away by a year or so. I don't think any sooner. So for that, until then, I think the inflation number is going to print higher and higher and higher. And he doesn't want to look like a wimp, and he's going to have a reaction there. Having said that, here's our economic calendar we need to watch for, okay? This week, durable goods tomorrow is going to be crucial. Absolutely nuts. This is crucial. But these are long-term stuff. So new orders, ex-transportation, and so forth. So in the morning, take a look at these. At 8:30, 8:35-ish, you would have the new numbers. Put the next to this column and expand that. And see what adjustments we have. Try to look at the adjustments. Remember, these data series are noisy. As such, you need to wait for them to be adjusted. Nothing that you don't know. I'm just trying to remind you. That's all. I don't know what he said today. I did not read that. 8 o'clock, I missed that. Again, Wednesdays we don't. Our system, the automated system doesn't trade. And I was trying to finish our reports last night on the data on the results. So I was up late. So I came in late this morning, like 9:15. Let me look at home sales today. Oh, we had bond auction day too. Okay, revised down 788. Yeah. And then this was below consensus. I'm not surprised. Rates. I mean, we were slowing down here too. And we should. We're near peak America. Everything's too expensive. Bonds, oil, market, real estate. We can't find labor. I mean, it's got to give. Free economies adjust based on supply and demand. We're in that process. The go-go days are done. Now we got to come back and get to reality. Has nothing to do with who's in charge, by the way. Don't give credit to anybody. Yeah, this is 14-year business cycle already. It gets to one extreme, the pendulum will swing to the other one. Other people will tell you otherwise. You can believe that. Okay? Or you can read it yourself and believe your eyes. Don't listen to me. Just read it. Yeah. Bond auction. Bid to cover was 272. Okay, and then that was a lot of demand. And yield was 267. Keep that number in mind. Okay. All right. I used to understand that a lot better. Okay. Jobless claims, of course. Current, I don't care. PMI composites. Okay. That's fine. That's 945. What else do we have? Anything else? Kansas City. No, thank you. Okay. Consumer sentiment. Yes. And Williams speaking. That's the Fed guy at New York. That's the second most important position in the Fed. He runs the New York Fed. And then pending home sales. Both of those are crucial. Let's take a look. This should pull back a little bit. Oh. Yeah, this should pull back a little bit. Okay. It's not. Okay. All right. And pending home sales, this one will. Prior consensus. Wow. Okay. That's already pulled back. This is expecting we're going to go up. I wonder. We'll find out. And this is way too far. 1.5 points. Yeah. I don't think so. We'll see. Who the hell is Chris Waller? I didn't know who this guy is. 1 second. Anybody know? Let's try to have it. Where's my list? Of these talking heads? Hold on. Yeah. Oh, that's a Fed governor, newly appointed Fed governor. Gotcha. Okay. I don't know what he's doing. Probably part of the cheerleader group. Yeah. Not a key guy. All right. Let's go to some charts. All right, let's talk about timing charts. Okay. That crossed as expected because we had this before, right? We talked about it prior. We crossed it. We're below that. And then we crossed up after this low. This is not a big low. This is not a big divergence. You see that? It's not bullish divergence. Look at that. To be a bullish, this would have been a bullish divergence. Okay? This low is lower. This is higher. Didn't fall, and faltered. Can I get to a zero line? This you'll see if you look at the volume data, this volume data was very poor. Very poor. So big one, it's very easy to move this on a low volume. That's why it went so far. Typical bear market rally. Keep that in mind. Typical. And now it went to 2 sigma. I mean, how fast it went to 2 sigma? This line's a 2 sigma, right? Okay. That's 3 sigma. So, and could not get past and rotate back now. I suspect we're going to go low. We're going to find out. We need more data. The issue is, as I always say to you guys, look for the catalyst. Make a list of what you think could be a catalyst. See if it happens. Because if it happens, we're very news sensitive right now. It would be difficult to try to clear your mind what you should do. So I would be very careful any borrower stocks. I would be in the dividend-paying stocks if you want to stay long a little bit. I would nibble only. Your best friend right now is cash. Okay. I think we're going to go a lot lower between now and June 30th. I could be wrong. I have been wrong before. This will be my first or last time. But over the last 10 years, I beat the second guy in this business by 100%. So I think I try to keep track of it in my mind, but I'm looking at so forth. Here's the data. No, boom, wrong slide. You've seen it. You see, you don't need my help. There we go. We see that number? Yeah. This guy's a very smart guy too for himself. Look how beat him by. So I think I know what I'm looking at. And now I've been wrong before, and you can't judge anybody by one trade, okay, or 1 year or 1 month. But that's what. And usually we go, all of us, including the system also. I'm sidetracking you now. Sorry, including our automated system. If you look at the payoff curve, you can see goes for a while. There we go. Goes for a while, pulls back, wins, pulls back. I had a bunch of people who, in this part, pulled out. And they were good. They were early. And now, as they missed the run-up. This is about long-term systematic trading. No different than the PMT here. It's a long-term setup. So you're not looking at just, 1 period or 1 month. It's the issue that, just like human beings, the machines wins and losses come in streaks. Why? Because it's programmed a certain way. It reflects my personality because I wrote the statement of work. I also wrote most of its indicators. I had a guy come into the API point. API is when you communicate to the exchange for execution. Okay. And so what I'm looking at right now, it tells me we're overbought very fast on low volume. We got oil problems. Cost is mixing. We're going to see, I think we have a good chance to see $6 in Florida. Very high fives. Already it's the early sixes in California. Probably hit 7 in Northern California. It's going to impact. As Scott Patterson today from Wall Street Journal told me, and he's the right point. I mean, I've known him at least 10 years. He's followed me for a long time. So it's very, you and I know that oil is disinflationary. It's true. As the oil goes up, it pulls back. Why? We slow down. So that's going to slow down. Goldman Sachs already lowered the earnings estimate for S&P. In this environment, what's going to happen next? The PE multiples are going to drop. So stocks are overpriced. Now, the smart money has already moved. This is all-time high. Okay? This is all-time high, right? That line. Remember, we use same colors on all charts. We've already moved. It's already cashed out. The issue is, are they safe? This is not good enough. Drop yet. If another issue comes, we're one chemical weapon away for dropping X number of a percentage of this value. Keep that in mind. And we got a crazy man called Putin, okay, who, look what he did to us last 4 years. Okay? And now, look what it's done to Russia and Ukraine. He's going to be in a corner. You put a cat in the corner, he is going to come and scratch your face. So anything goes wrong. He already sent his FSB guy to house arrest. He told his central banker, you cannot quit. And one of his buddies left, the head of the climate czar, and some of his oligarchs are on the run. And Manafort was going to go over there, and they caught him the other night at Miami. Okay, one of his stooges. So all of this is telling me he can even get more violent. And the fact that what he's doing to Ukraine from a military standpoint, remember, my background, military industrial complex, I did a lot of studies on oil prices. I wrote a paper with Charles Rizavi, the very famous Arabist who advised with a number of country heads in the 70s about how OPEC was done, including that gas contract between ENI and Iran in the Strait of Hormuz. And of course, my dad was involved by sending 3 tankers into Haifa in the middle of beginning of Yom Kippur War to save Israel. And that was the impetus for oil prices from 3 to 12 overnight. But he had approval from both Nixon and Kissinger before doing that. That's how OPEC got some meat. Before that, he had no teeth. I've been around oil a long time. I've been around military a long time. And now it's the markets. This is the intersection of these 3. If you really analyze it, I don't think we've seen the bottom of this market yet. I could be wrong. Miracles do happen, but those are 5-10% chances. This is going to get a lot nastier than before. And the fact that there was no volume there tells me that. You saw what Paul Icahn said yesterday. He said, I don't buy this. This is too weak for me. We'll see. So be extra careful. I'm not saying follow me. I'm not saying do what I'm doing. I'm just saying for your own sake, be careful. Don't get on the wrong side. I intend to short this baby sometime tomorrow. Okay, I think we're ready to go on another leg down. I'll do it, put a spread on, hit my target, cover, and wait, and then do another one. Maybe the other one could be down there. Let's say here. I want to see 4,000 taken out. Then that would maybe a possible buy. My original goal was, remember, we talked about it, on this area. The weekly 200 mark. Too far up. Too far up. If everything I've said works together, yes, we can go there. We can go there. But we gotta watch. We gotta watch and see. So we'll see. But that's my game plan. We're CI dips are already starting to begin to taper on both ends. And if we don't reacquire the 200-day, that cross, this is gonna get a lot nastier. You'll see. A lot of the money managers have to sell. So now month closing is what? Next week? Next Thursday, I think? Yeah. So we'll see. We'll see how these those 2 couple of days, 30th and 31st will work out. And remember on the 1st, it's April 1st, I think, let's see, Good Friday is on 15, right? Because expiration is 14. First would be non-farm. Yeah. So we'll see how that comes out. What else? Look, the strength this had. You see it? Nothing there. The breadth trust did not make it. So I would be very careful here going forward. Canaries. Okay. This one was a surprise for me. Let's just be upfront. This was a good move on transportation. You know how much emphasis I have and I will put on Russell and transportation over the years. This was, for me, was startling. This kind of a move up. But it's coming back down. It's giving it back. Let's get to half of this that we talked about this level. Let's get to about 16,000, 15,900 on transportation. Then we count. We talk again. We take counts, right? What did I forget what Gecko said? And you guys see very soon we're going to be below 50s again. When we get below 50s, this one's different. This is already above it. But you get 50 below 200, and we get below 50. It's this slipping. That's what I call the sliding. What do you call it? Slippery slide down there. So we'll see. I think Russell has been beaten up good enough. So any move down here could be a problem. About 1940. Okay. Look at also how the slight amount is pulled back on the CI diff. It's early. Why? It's weak. Here's the issue. One of the things I look at is when are we rotating at what level of CI? It's at 7. It's at 6 there. We're rotating. That's bad. That's not good. So now one day doesn't make a market. Let's see what the follow through is. The trenders, okay, we got some reprieve there. A couple of them came up fast. For example, this was driven by this bar in transportation. Long term, 1, 3 out of 4 on the 200s are negative, and you got all the 50s positive for now. Well, if I'm right, this will be short lived. Okay, It'll be go back to, now remember, down here, we're all 8 negative. So, yes, did I miss that turn? Of course I did. I'm not going to admit no. Can't lie. Trading is about being truthful. And so, no. It's like betting, maybe having a bet with your bookie. Go pay it. Go pay the bookie. Get it out of your system. Because you need to move forward. You got to look at the next trade. You can't run with excess baggage. Now, not much run up there. But remember, the peaks are earlier. Okay? The lows, not surprised. Why? We're still fairly high up. Look at our PEs. We're still very high up. If this market is going to adjust, it's going to adjust. You know, it'll take a while for these numbers to pop up. These are 52 weeks lows. So this is normal to be low. Yes, this signal a possible low. It took about 3 or 4 sessions for it to make the bottom go back up. We're still short on the long term. We don't see this often. Now, the day this is reversed, then I would say, okay, I'll throw it in my hands. We don't see the weekly model turn that often. So it's just gone to a short. Well, we were really short, what, 4 weeks? Now, yes, this past week, the move was huge. This week just started. We have 3 days in it. We'll see. But, and then, look how fast this turned. Well, this is that's Momo, right? Small brethren of SP1. It turned 3 days ago. It peaked 3 days ago. So internally, we're weak. This looks at S&P 500 advanced decline and some other internals of S&P 500 purely. It does not take into all NYC. Why? Because there's some junk there. This is purely. Look how fast that turned. So even though we went up 2 more days, it didn't budge. VIX and BXN. Oh, what happened here? Hurry. What did you do? Okay. Outside bar, we talked about that midday today. Yeah. What else do I see? Okay. For my scenario to work, obviously that's a peak up. Go back up. If it doesn't, that's a signal that I'm wrong. So that would be early warning. I talked about here, about 38, and we never hit that, right? Yeah, we never hit that. I'm saying 40. I talked about 40 to 50. We only went to 38 and pulled back. 38.94. Remember, this is a cash index. So 38 and 94, right? So we never got to 40. For us really to see a bottom, you need capitulation. You need, I'm going to get into Larry's stuff. To get there, you need a 40 to 50 area mix. We haven't seen it. That means it's coming one day. No, I'm saying 5 years from now. No. I'm thinking within the next window of, like, say, 2 to 3 to 6 months, we're going to get a VIX 40, VIX 50 easy. Why? We need to get rid of the excess. The only way we can do that is when the people throwing baby with bathwater on the 10th floor. Why would they do that? Because they become indiscriminate. Why? Pressure. When does the pressure come? When the VIX is high. Right now it's hunky-dory. Everything is good. Buy, 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 buy. Listen, 25 million people have come to this market since March 2020. It's called PPE money. And they got it through, and they put to work on either real estate or on Robinhood. Do you think Goldman or Morgan or the big hedge funds will allow that to continue? These guys have never had a bad year. Wait. That money gets sucked out. 25 million new investors / traders. Majority have no clue what they're doing. And why? How many of I know a number of you have been here a long time. I mean, I look, for example, Dennis. Gone through 87 crash. I went through silver crash. 87. 98. 97 and 98. The bot, you know, the was it Thai bot and then the Italian, the Russian notes. That was 97, 98. 2001, 2008, 2020. Most of these folks haven't gone through any of that. There's a lot of money. There's a lot of money out there that's going to be sucked out. Some learned a lesson since January. Remember, market peak was when? Yeah. January 4th. So they're in the water already this year. If they had just bought purely a spot, just thinking market benchmark. But we're not done with it. That money will flow out, you'll see. It's just a matter of time. I could be wrong, but history is on my side. Let's go to SQ. SQ began to put, this is today, this is just came in. This morning was up here, remember, it's 1 day behind. It's upticked a little bit. This is normal. There was one of these days here, I forgot what day it was. I said it on Twitter, on at Analytics. I said, this doesn't make sense. We were, let's see. We were running down, and the skew was not ticking down. Okay? This is the tail risk of an SPX options. Very expensive stuff, like Siamak trades that. But, you know, he's a rich guy. It's different. You trade that SPX, it's expensive. Not SPY, SPX. Large players play that. Large hedge funds and so forth. This is the tail, the lower side. Okay, tail risk, I should say, because you have calls and puts. This is the put side. Puts are tail risk. When the market dumps, the tail risk should drop. That means it's already going there. Market was dropping and tail risk was going higher. That says they were putting out more bets on. Okay? Now, they could have covered by now, but this will tell us. This will tell us. So keep a track of this. $sign SKEW.X if you're using TradeStation. What we do is that we just overlay Sigma channels on it so we can measure it against itself. The beauty of Sigma channels is that it creates a measure for you of natural vibration in the nature. Okay? So I'm going to start featuring that also on our blog. By doing that on the blog, we're giving you an update for the current chart right now. But we're a little right up saying how to read it. I'm going to make it a little bit better. You know, the problem is I'm time bankrupt. But it's good because in a way it saves me time, lowers the number of questions on Twitter. You know, the Twitter is crazy. So anyhow, but I have a lot of people using it, so it's hard to take the candy away from the kid, right? In a candy store. Okay. By the way, last again corrections. I'll talk about our mistakes up front. We had ESH22, I believe, in the last webinar. My apologies. The one before that didn't matter because we were been current. Okay? Yeah. The other one would have been current, the end 2 weeks ago, or whatever that was the 8 or 9. But last week, you were using Edge. How do I know that? I caught it today. Yeah. Should be M. We're using current front month contract plus front month spread. If you look at it here, this is you can do this yourself. It's very easy. Just write a spread indicator. Plus X minus Y. But we're running, so you know, we're running April contract, long, short July. Why? Because we're done with March. Next contract running for us is April. Now, remember, VIX expires not the same day as the index. It expires 2 or 3 days before. Occasionally, it could be the following week. Very few times in the year. Maybe one time. Max. Maybe, possibly 2, but normally one time. Because the way the calendars run between SIBO and CME. So you have to look at which one you're using. I usually roll the Friday before. So I look up of the VIX expiration. Whenever it's a VIX expiration, I go, why? You can see the volume shift. You see the players shift out. The big guns, they roll out. Just like they do on the futures for index, they also do it for futures for VIX. And this is a VIX futures spread. Okay? This is called VX. Not VIX, but VX. And now what does it tell us? Well, this is all nice and dandy, but what does it tell us? It's 1.67, that means we're a little too high. You know, if we had hit 0, I would have said, okay, maybe that's it. That's near the bottom. But time has shown us, if you go back, let's go to 60. I'm sorry, let me mix this to 60. You could see the scales have changed. This all changed with pandemic. If you had gone last 2 years ago, look at this stuff, none of it makes sense. I had a hard time understanding my own creation. Why? Because the scale changed. So when that happens, what do you have to do? If you're first to this space, what do you have to do? You have to also create the rules. Okay? How do you do that? It's tough. you gotta go and you gotta back test it. There's a lot of work goes into back testing of it to make sure that the rules you're making make sense. But at least 70% of the time, 80% of the time makes sense. So right now, where we are now, look at these values that were earlier. That was on the 15th, yeah. 11 was a Friday, yeah. So, by the way, this runs on Sunday. Okay, not Sunday night, but it runs early Monday morning. Sorry, my sleep has been very limited these last couple of weeks, as you know. Anyhow, so 1.67 to me is, no signal. It's not neutral. No. But it's not positive enough. It needs to go higher. And remember, this is reverse asset, inverse asset. So as this goes up, market drops. It goes down, market is rising. Okay, it's done that part. Now it's done this other cycle. Also, stock sign. We did basically, we've done our rendezvous. This is a laggard, okay? There's a three of them there. We're getting there. We always look for these rendezvous points. Up or down, up and down. So we finished that. Boom. Next leg is downside. You already see when we went yesterday on, is that yesterday? Yes. On my favorite indicator, I wrote this for a friend of mine, not in this version, but close to this. He was a timer of a decade. He was a timer of a year. Stan Harley. And he was my president at Mask in California, user group. Of course, right after I became VP, he had the issue, he had to leave, and I, family-wise, not trading, no, good trader. And then I had to accept that position. But this is one of the things I did for him, and over the years, I've just adjusted a tiny bit. I haven't touched it probably the last 10 years. Mainly technical. The color issues were what new versions of TradeStation afforded us to do. But look how fast it turns. It is very good on very, very short term highs and lows. And one application of that is always bearish bullish divergence. Look at that. Look at that bearish divergence versus that. It's not perfect. We're almost there. You can see it here. Okay. No, that's not it too. Hold on. No, that's not exactly correct either. Hold on. Here we go. No. That's not it. Hold on. Not getting it. No, we're not. I'm not getting any bullish or bearish divergences. What you want is the second bar to be, and the bullish divergence to be lower with the indicator higher. Not seeing it. No, hold on. Yeah, this one was. No, this one was. This one is a, if you look carefully enough, yes, it was. This was a bullish indicator. And that was when? That was in December. And we did go higher. I don't see anything else here right now. So, and this low volume, it scares me. So, I'll tell you why. Why it scares me. Capital markets have a purpose here. They create jobs. They create capital for new investments, new ideas. That's what's getting killed here. Every time we have these tumultuous markets, because some stupid guy did something stupid or whatever out there, or some event happened to us, or 2008 was a group of them, not just a few. It creates a destruction of capital, and the mom and pops who really need this stuff to build their nest egg, they get setback. They get setback. I'm not worried about me. I'm going to survive very well. Don't worry about me. Okay. I did Black Scholes back in 1980. So I'll do fine. I'm not worried about me. I'm worried about the average guy out there, average guy trying to borrow money, average guy trying to get investment, trying to get listed, coming with a new invention. And remember, they have cascading events. Not everybody who's that needs to be in Silicon Valley to be a millionaire. But those guys have subcontractors. They need cars. They need homes. They need food. All the things have cascading events on the economy. We're killing that. Okay? Problem this time is we have a lot of debt. The last 3 years, we've added so much debt. Go to Federal Reserve of New York, you'll see how much we've added. It is scary. It's scary where we are. And any increase in the cost of money will have a huge impact on our budget. We have to cut from military. We have to cut from social welfare. Because now we got almost $30 trillion debt. So we can bust the budget. Yeah, bust the budget as interest rates move. We're in a pickle here. We're in a tough environment here moving forward. I mean, just every day it's just, and we put ourselves there, by the way. We did. Iraq war was wrong. I would have not gone put boots on the ground. Yeah, that was a mistake. So, actually, Afghanistan too. I would not put boots on the ground. Send the B-2s. That's what I built them for. Send them in. But now, it's too late. So, unless you want to file bankruptcy. Didn't what do you call it say that? What do you call it? The fellow, I forgot his name. The guy's 64 nominee from Minnesota. Goldwater, yeah. My dad likes it. Goldwater, yeah. So, anyway. Okay, let's go to the next problem. Interest rates. Okay, this is the term structure of interest rate we're in. This is the 2-year low. I'm saying 2-year highs. That's what happened. No, valid, nothing unusual. We had expected that to happen, and this is trolling up because of oil prices. This is one of them, and the other one, future expectation of the Fed action. So it's coming pretty strong. Now, they're going to touch this, but they're going to taper that. They're going to stop buying that stuff so you can see that pressure. But that's the 30-year. This is long-term insurance obligations. These are the guys who build the buildings in New York so that they did the mortgage, and they put up the mortgage, they build that because they need their pension and long-term insurance obligations to you and I. This is housing, local housing. This is local cars, and this is companies borrowing. By the way, I think we have massive liquidity issue on the short end. Just look at the repo. I want somebody to explain that to me. Repo market being over $1 trillion a night. Something is broken out there, guys. Something doesn't sound right. Used to be in billions, not trillions. Yes, the comment from Dennis. Yeah, that 21% for construction financing, 1981, when I built my first home. We've got too cheap money. We have. Yes, we have. Yeah. Problem is that this, because, remember, we make the wars and we make the famines, right? There's a flight of capital. But pretty sure there's no capital out there. I mean, go on. What's coming here? Yeah. So, and then we go back and listen. Right now, we got to do a Marshall Plan for Ukraine. I will take the oligarchs' money. I will take Putin's money and send it there. Yeah. We don't have money to spend on Ukraine. Listen, do you see what happened to the money we spend on Afghanistan and Iraq? Did we learn a lesson? So, it's a total mess. Our leaders have failed us, all of them. I don't care what ilk you're from. They've all failed us. But remember, history is easy, right? After the fact is easy. At the time, I was on for Bush to go to Baghdad because what he had done to Iran and the use of chemical weapons, okay, which we provided to, by the way. But look what happened in Iraq too. So 20 years there, or 15 years there, and 2 years Afghanistan. And then what does China do? We go and fight in Afghanistan. They buy the mineral rights to rare earths, right? So it's a mess. It's absolute mess. Anyway, I'm glad one thing, we're setting up shop for TSMC in Phoenix. That's the Taiwan Semiconductor. They are the only one in the world who have a 5 nanometer technology for the future of chips. I don't want it in Taiwan. Put it here and close down Taiwan. Don't build it here. Why? It takes China away from going there. Why do you think China wants to go to Taiwan? It's the technology. It's not that little island. They got nice resorts. No, they don't think like Trump. But the Trump was saying we should. The Chairman Kim should open beaches in North Korea. No, nobody's going to go there. Nobody's going to go to Taiwan either. We need their technology. That's it. Because we don't have it. Even Intel doesn't have it. So let's go to Larry's. Guys. Okay, let's go a little bit less less focused. Let's pull back. We're going to do daily. Okay, now, do you guys see any penetration of 90%? Remember, that's 80. Oh, that's 80 right here. Why is it going to my cursor? Okay. This is a 90 line. That's a plus 90. You need two 90s and a flip back at 90 plus. So two negative 90s, one plus. Do you see anything? We got close to these, but back there, not here at all. And this is when you went to Ukraine. Okay, this is not a low, guys. It's not a low. By miracle, they may pull it up, but force of the market, no, I don't see it. And everybody I listen to that knows this model much better than I. They're saying, listen, hey, we don't see it either. You short? I said yes. They said we're going to stay short too. So maybe we all die together, but I don't know. But right now the data doesn't support that, so we'll see. And don't be surprised. We drop what 400 points today, 450. Yeah, type this times 10 equivalent. Really, if you look at it on the benchmark, it's times 10. We did 45, 550 on top, 9.5, whatever, and the Dow. So, and this is the model that Peter Cook programmed. It comes also from Larry. This is the tough part. This data is tough. Only TradeStation, I think, has it. But let's see what we have. This went long. This went long. This is an NQ went long. RTY did. A little bit late on EMD, which is mid-market. And here comes the S&Ps. So they're long. Wait until we already hit 2 sigma. We already hit 2 sigma. Watch for it to rotate. You could see it on how it's pulling back. Now, this is not CI for anything. This is the internal data. I forgot what's called for. Some sort of value series that TradeStation does. And you can run it. But we'll keep track of it. But that's where we are. One more chart here for you guys. Let's see. Okay, let's see where we are here. Okay. Roast beef. No. Oh, coffee. Thank you. Okay. All right. So, yeah, I ordered one of these, and it's not going away. Yeah. So figure out what you ordered. Okay. We're above. Okay. This chart is constructive. This chart is truth to be told. It did go down to 35, bounced back. It's gone through the 2 lines, 2 moving averages, the 50 and the 20. No, I'm sorry, 20 and 50. This is 20. It's because more reactive. Yeah, this is 20. That's 50. Okay. The issue is what are we going to get these 2 lines closer together or no? It's very wide between them. When distance gets wide, we're going to have a continuation. If it's going to be reversed, they have to get closer. So go to stock charts. They have it. And that's your symbol you're going to put it. I think TradeStation has it. Also, they put it out. I don't know what they call it. They put it out several times a day. I don't want to look at it. I want to look at it at the end of the day. Because it's not reliable throughout the day. But this is good. It's big aim to pull back. Okay. If I'm wrong, these 2 get a lot closer. If I'm right, they'll separate again. Okay. Let's see. Is there anything else I want to say here? Nope. Nope. That's it for us. So I'm done with the presentation. Any questions for me? You can follow us on Twitter. Let's see if this thing worked. Am I logged in? No, hold on. I think it's working. Yeah. This was a problem before we fixed it. Yeah, this was on a new server. There's a free PMT review, which gives you a chance to look at up to 4 weeks behind. It's not real time. 4 weeks, always 4 weeks lag. This is how you follow us on Twitter. And we post to the best we can throughout the day. Okay. Well, that's what's forgotten. Yeah. So, again, and then we have an open house on Friday. But I would like you to come in first tomorrow afternoon because we want to go through the rules and so forth to help you and give you stuff to look at and so forth, and so that you don't come in confused on Friday. But that's for trading NQs. Okay, if you're interested in trading NQs, I'm sorry. I have no idea. The question is, when do you think market will bottom to make a long-term buy? I have no idea. Well, the market shows us. You got to follow the market, right? Market is going to show that hand in essence. It's not going to be when the volume is low. It needs conviction. It also needs baby with bathwater out the window. We need people to throw stocks out like they don't want it. When they want it, it's not the low. They got to go through 2 or 3 push that nobody wants it. When you have it really, when you get up, let me put it this way. When you come in the morning, and you know what you want to do, that's not it. Maybe when you don't even want to come in. Yeah. You rather stay in bed. Now look at the charts. Then that's where it goes into the low. I've been through too many of them. The difference that I was short most of those. Because I learned the short button. Yeah, I learned the short button early. Because my work on options. Yeah. I was a student of Jack Shelton. Okay. He did you can read about it here, about my professors. Shelton was the one who did what Black-Scholes did a year later. Yeah. And that was the bar. I got that, I couldn't do it. I was working on B2 back then, the predecessor to B21. I quit. Yeah. So, then I learned the short button by doing put spreads. This because I do believe you could have a core position for your long stuff, and even that you should time it like with say weekly chart or a monthly chart. But along the way, you should not have any legions. You should be loose. You should be willing to go long or short. Otherwise, you're going to believe your own bias, and that's going to kill you. Yeah, let the market talk to you. So, and then for that, you just need some indicators and see what's the historical they've done, and then you and also nibble. Small bets. Never put a big bet. Your market is there for you to take some money, put it, and put it aside. Take some money, put it aside. Don't bet the farm. That's how you back to poor house. And I've done it a couple of times myself. So. There's no schooling. You need some arrows in your back. But if I go by those rules, this wasn't the law. Yeah. We have too many problems. And could we go down and down and down and down? I don't think so. Unless, we could go there quickly if Putin used a nuke. If Putin used a nuke, might as well discuss that. S&P will be cut by half in one day. That's a buy. You know why? Because if you go to World War III, who cares that you're wrong, right or wrong? So if Putin uses one tactical nuke, I'll buy. I'll buy everything. Bottom line is, if they hit US and they hit us, and we're going to hit them down, we're gone, who cares? If they don't, that's a very good buy. You see what I'm saying? You have to look at your matrix, your decision matrix. I have no idea. Again, I looked at the market. I look at charts 2 or 3 times a day. Yes, they could, Gary. Gary's asking, can precious metal and miners outperform within the declining S&P? To their point. To a point. Here's the point. Well, here's the reason. You've noticed in recent times, the oil went up, the gold went up and it pulled back again. The point is, if it gets too far up, who's going to buy it? You bought it, let's say at 2,000, and they're expecting it going to 5,000. Who's going to come and buy at 5,000? They need, if he starts going that route, they need the money to buy milk. You know what I'm saying? That's why you see so much ads for gold guys. If the gold is going to do that well, why do you need to advertise so much? The problem is greatest fool theory. It's just like real estate. You buy something, it'll go up, but you need to wait somebody to get you out. Otherwise, you just have a piece of paper. It's an unrealized gain. Okay, to make it realized gain, somebody has to pay you. If we get into that kind of a mess, who's going to have the dollars to buy you? Your position, not just you, all of us, all the sellers. We're long, okay? Yeah. So I would allocate. Use a small amount, allocate. Yeah. Don't put all your bets in one one boat or one basket. Yeah. Yeah. I'm saying a question again from M&M. How low I think? I think that chart-wise I can answer you. Current charts, as it stands today, I can answer you. Somewhere in here, 3,400 on S&P. So we're about 1,000 points high. That means we're 10,000 points high on the Dow. Here's the Dow. So we're at what 34 should go to it should be it's gonna be deep. Let me go to weekly. That's 6. It'll take this out. Yeah. Remember, this is only 30 stocks. This go faster. It's got a little bit higher beta than S&P. It's a wrong benchmark anyway. It's arithmetic and it's only 30 days. So I rather go with S&P. So let me put this back where it goes because I'll forget. I have to see what I do there with this chart, right? With this chart, I forgot. So it's easy for me on S&P. I'd say 3,400, 3,500. That's where the team's going to go. Yes, sir. 200 day. Our chart's always the same. Yeah, it's a 200 day weekly. It's not our webinars. We do not change color because it stops what I call cumulative learning. Those who have been with me for years, they know what I'm talking about. So we adhere to that. That's one of our rules. We don't change colors. Yeah. The red is always on top. Red south, bottom is green. So, okay. Any other questions for me? You're quite welcome. Those of you who are trading NQ, I welcome you to come for webinar tomorrow to learn what we're doing. That won't hurt you. And here's the link. Any of these three. And then Friday would be all day. Would be at 8:30. Okay. This will be posted. I'm closing it. I don't see any more questions. Thank you, Greg. Appreciate that, sir. And then we post it immediately on YouTube, our channel there. And then then Admiral and I were going to go have a drink. Yeah, my 9-pounder. He likes scotch. Can you believe this? Yep. And he's very jealous now of any blonde girl. If I talk to any blonde girl, oh man, I'll not hear the end of it. I get court-martials that night here. Yeah, that's one. We'll do that. Take care, guys. See you next week. We try to keep this short, guys. Why? With tumultuous times. Okay? Keep it simple and short. I can do it. We can go over it, share it with you. And also, follow us on Twitter. Follow us and watch the blog. There's a lot on the blog, too, that we post. Make it a little bit easier. Give us some room. I'm sorry. It's hamzy.net. To post some stuff for you guys to get to. Okay? Good luck trading. Keep your bet size small. Keep it in check. Thank you all.